Hello, hello. Welcome to Ready Set Live. It is February 26th, and we've got some market action going on, haven't we? How's
Been
everybody
quite a
doing?
week.
Yeah. Oh my. So we got lots to talk about, but first, as tradition, where's everybody coming in from? How's everybody doing? Oh my gosh, I'm hitting things on my desk. It's stream's doing great.
We've got Singh from PA is coming on board, and Fidel is calling in from the toilet. That is awesome. I suspect that a lot more people actually do that, but nobody ever really admits it. So
Ah,
good for
yeah.
good for you, man.
Excellent. Oh,
Do we have reverb or do we have echo? I don't know why that would be.
yeah. Or maybe that's where he's coming in from.
It's coming in from reverb. Yeah. All right.
Oh, you got me questioning all my audio settings. Oh man. Cool.
We got Kansas City. Is that in Kansas or is that in Missouri?
You
We
should ask
have
Trump.
Maureen coming in from LAX. We have Crypto Cookie from Tennessee. We have Andrew from Oz. Welcome aboard. We have Fidel, or St. Louis, Missouri. Yeah, that we were being facetious there, right?
Facetious.
Yeah.
Uh,
Good to see everybody today. We've had a hell of a week in the markets. It's one of these times where people that see all the movement going on, if you're new to markets, you're going to lose sleep, you're going to panic, you're going to do the Wilhelm scream. you're going to it's not fun. I remember when I first started trading, I had, you guys know what a speed bag is, right? So it's a boxing speed bag. You sit there and I had one of those in the basement, and I would just days like today, I would literally just pound the living shit out of it because it was so frustrating. Because more often than not, you'd be on the wrong side of the price action, and it just takes a while to look through what's going on and to understand what's happening, and to look past it and to look for the opportunities in it. And it will be in the opposite side of most everybody else.
I think that's a good segue. So three of the things we definitely need to talk about today is first off, what's dominating the news right now around coronavirus and just overall market fears. Second thing is around stock market. How are equities performing and the larger indices, and then third, how is Bitcoin and crypto and digital assets sort of weathering the storm. And why are they doing what they're doing, and where can we kind of expect things to go from here? Let's try to see past the trends here and see past the hype and the fear and all that sort of stuff. So should be a really good show today. But yeah, I think the first thing to address is for those who are regular to our shows, we do this Wednesdays at normally 4 p.m., but we were a little bit earlier today. I don't know if you guys noticed, because I wanted to catch the market close here, see if we couldn't pick up some potential volatility coming into the close of the U.S. markets. So doesn't look like it really manifested to much, but it's been a volatile day. So what's been your
Isn't
take,
isn't
Doc?
that isn't that such an antiquated concept though, that a market actually has an open and a close?
Yes, it is.
I mean, I think that's one of the paradigms that cryptocurrency has changed. Even Forex trades
Mhm.
24 by 5. Even Forex takes the weekend off. And I just don't think that financial markets can afford to do that. Look at what happened with the CBOE,
Mm.
the Chicago Board Options Exchange, when they came out with the Bitcoin contract a couple of years ago. It sat there and died on the vine because, for many other reasons, that they were still trying to use the old paradigm for it.
Hmm.
So you don't trade on the weekend with cryptocurrency. You are going to wake up Monday morning and, you know, shit's going to be moving on you. I mean, there's no way to say it. It's like it's impossible to manage your risk on a position when the very instrument that you're using to hedge with that has moved on you. So
Which was kind of one of the best comments I saw of today's markets. We saw the market open, 9:30 in the morning, and things started to sort of rally. We've had 4 consecutive days, red candles in the stock market. So to see the market sort of start off, people getting over themselves, and one of the comments was, oh well, everybody knows that you can't spread coronavirus on Wednesdays. So yeah, it has ebbs and flows for sure, but I think yeah, that's where we should really address some of our time and consideration here as to what's going on. Why is everybody freaking out? And let's try to be the smart money here. Let's try to get ahead of the trends here and address this properly, and not just base our judgment patterns off of headlines and the hype and speculation. So I think as it relates to coronavirus, it is definitely overblown. There are some certainly definite concerns to have around anything that has potential to be a pandemic. We will see in about 2.5 hours, Trump go on and talk about this with the CDC and kind of address some of the concerns and the fears of how the U.S. is handling the response. But certainly over the last week, the what's really seemed to change, and we go through this cyclical flow of like, oh, everything's okay. Oh wait, it's all bad. Media blows it up, and then we go in this pattern over and over again because we've been talking about coronavirus for almost 2 months now. So obviously the first question is what's changed, and it seems to be that there's this, I guess, perception that there is no containing the coronavirus now that it's spread to. I think that the total is 26 different countries, and there's 60, 70,000 cases, and there's this looming dread that it's it's gonna there's not gonna be anything to stop it at this point. That
So
it's
how
just
does it compare to Ebola?
so that's a great question. And we
Thank you.
should, yeah, yeah, of course.
It was a good one.
So yeah, we can, just like markets, we can look at viral strains of things, viruses and other lovely pathogens that what are their attack patterns? How do they sort of differ from each other? What's importantly their ability to be spread, their sort of infection rate, and the other number to consider, the other percentage, is the lethality rate. If it can spread to so many people, how many people does it kill, and how is it spread, and things of that sort. So the easy simple answer with that is that they're night and day difference in terms of you know coronavirus is very much like the flu. It goes after your respiratory system, and so people that are very susceptible to what is I think it's called the cyclonic. There's a
Don't try it. Move on.
I know. But like your body essentially attacks itself when it senses all of this, and your immune system kind of almost becomes your own worst enemy. So people that are weak, have chronic disease, elderly, etc. Those are the ones that are primarily having fatal results with coronavirus. That's why it has about a 2.3% fatality rate, which doesn't really take into account some of the people that might have it and not even really realize it, or have mild symptoms. So the overall percentage is probably lower, but that's coronavirus. It's on that side of the spectrum. The flu has a 0.1% fatality rate, kills. I think it's even in the U.S. it's like 20,000 people per year or something like that. But that's in the presence of a vaccine, and for those who don't know, a vaccine is more about preventing the spread of things rather than you just being immune to something. If a virus, its whole job is to jump from person to person, and that's actually one of the other questions that has been raised about the coronavirus, is that is it going to mutate? Is it if it's 2.3% today? Is it with more ability to spread to more people? Is it now going to have more capability of a mutation? And thankfully, the easy answer on that one is not likely. There is it's a pretty stable pathogen. It likes to be spread. That's its goal is to be spread. So it's a highly successful, you know, like the transmission rate is very successful because it's spread through airborne, like sneezing and things of that sort. Whereas
Sounds
Ebola,
like multi-level marketing.
yeah, actually, yeah. So, yeah, and Ebola is spread through fluid transmission, so like blood. That, so even though it's a much more lethal, like 60 to 90% fatality rate, it's much harder to contract it. So that's kind of top level, what you guys need to know, crash course on uh, the sort of virology as it relates to the different things you need to consider. So, yes, the market is justified in being scared of this, becoming a worldwide pandemic. That's the word that's been thrown around a lot this week. But does it necessitate a total, potential recession indicator? Is it, we were just, 2 months ago, we were afraid of the Iran conflict potentially kicking off a recession or, turning things around. Uh, you know, Last year we were afraid of the trade war and things like that. And that's actually, I think, a really interesting point to bring up as to, those two instances, Bitcoin and crypto in general, were very good at being, a sort of crisis hedge. They performed contrarian to the overall stock market, which obviously went down during those events. This time, however, we're not seeing that be the case. In fact, Bitcoin is down more than just about anything else today, or crypto in general. So what's going on? Is it time to hang up the flag and say, oh man, digital assets will never be digital gold or never be hedges or whatever. I think that's very short term thinking. I think what we're seeing develop with this space is the ability to be an alternative asset class first. A hedge, digital gold, these are narratives that take long times to develop. Gold has had the luxury of thousands of years to develop its narrative. We've only had 10. So it's very still much the early days of these things. I will say that today, tech stocks, or, FANG in general, killing it compared to what's going on in the S&P and some of the other major indices. So, yeah, I've kind of spieled on a little bit here, but yeah,
You
there
mean
was.
the MAGA stocks?
Oh yes, yeah, I saw that picture.
Microsoft,
Hmm.
Apple,
Or Amazon, yeah, yeah,
Google, Amazon, right?
yeah. So yeah, there's a great question about China and how it's affecting China, and I think the sort of follow up point to that, where people are really taking this to the next level. So another YouTuber who I won't name, but is also pretty prevalent in this space, said that it's not coronavirus is not the cause we should be looking at. It's not the cause of what's the market dropping right now. That has more to do with the margin calls of things. That has more to do with sort of the supply, just like when China is not exporting things and there's a real disruption to the global supply chain. Um, you know, yeah, it's great for stocks like Netflix is killing it right now because everybody's inside, and Baidu, their servers are overrun. But for the most part, there's major fears that this can have a compounding effect, and then where there's starting to be conversations around is that is it the role of the Fed to step in and have some sort of role to address some of this? Is do we go to the central banks to prevent a turnaround in the markets? Yeah, it's
I hear Venezuela's got excess capacity right now.
that's yeah potential.
Maybe that's something that we could use.
So yeah, it's a good point about China. It's a good point about where things are. But again, I think also we have to remind ourselves that viruses spread in winter easily because people are in close proximity, and that's just kind of how it is. But when things heat up and people get outside more, they have a lot harder time. So that's the common cold, the flu, spread during the winter, and when things heat up, the majority of 80% of the world's population gets outside. I think we'll be in a much better place, and vaccines are already going to be developed and are working on, and so we'll see a distribution of those. And again, it's really about more of a preventative measure, trying to help ease the spread of what's going on. So yeah, I think that's sort of it from my perspective. I think what we're seeing right now is just sort of a hiccup, sort of some fears, but does this signal a major turnaround in the markets? Is this the beginning of the end? I don't. I'm not seeing the indicators to justify that. So even though it's a little bit scary right now, I think we have to keep the larger perspective in mind. But Doc, what's your opinion on all of what's going on?
Oh, this is not the end. It's not even the
Yeah,
beginning of the end,
yeah,
but it may be the end of the beginning. I stole that one.
yeah.
Hey, no, that's a Churchillism.
Okay,
So
okay.
that's a great quote from Churchill. So I use it whenever I get a chance to. Um, hey guys,
Oh,
new book out
oh,
today.
uh-oh.
New book out today. So this thing is big time. This is everything that I talk about in terms of the four major rules of trading: price action, fractal energy trading. And so I finally got it down. Stuck a gun to my head and forced myself to get this thing out there. So it is out in print or Kindle format. Knock yourself silly. All right. So there's let me share the screen here. I'm going to talk about things from just a market perspective. Yeah, let's see if I can find the right screen to share with you all. Here we go. Okay, so what I want to talk about first is the main driver of
Oh,
markets that's out
sorry,
there.
sorry, guys. I did it again. I screwed it up. Oh man, I'm
Oh, is this the, do you want me to unshare?
yeah. Oh boy. All right, there we go. I got it. All right.
You got it?
Technical difficulties solved. All right, we got it. All
Okay.
right.
Good recovery. All
Yeah,
right. So
yeah.
what we have, what we're looking at here, at least I think we're looking at here, is this is a 1 hour chart of the S&P 500 E-mini futures. This is the most liquid and most actively traded instrument literally in the world. Maybe minus bonds. I think between them and the bonds, there is a little bit of competition, but certainly from a futures perspective, this is the most actively traded instrument. And the S&P 500 is, yeah, basically got a notional value of about $30 trillion, something like that. So this is something that everybody around the world watches. Now, one of the I'll get into Bitcoin in just a second here, but this is worth watching because if you have a movement like what we had the other day, which is, there's no question that this thing was we have these black swans that occur from time to time, especially you go from range expansion to range contraction. And so this is only over 4 days. That is typically what happens. I mean, this is a great analogy also for prices take the stairs up and they take the window down because fear is a massive motivator. Why are people fearful? Because it's all about uncertainty. So the more certainty that comes back into anything, the more that we're going to recover from that. All right, so keep that in mind. Now, the other thing I want to mention as well too is that when you have something that happens like this, which is a black swan, what happens to traders that over leveraged, and there's a lot of them out there, and I'm not talking about you, but very well could be, is that you get what's called a margin call, and it's happened to everybody in their careers, where the broker says you don't have enough capital in your account to cover the position that you're running right now. So either you add capital right now, or we're going to liquidate the position on you. Now, for those of you that are trading on stuff like BitMEX, there is no margin call. They just liquidate you, right? So it's the same thing, but a typical margin call means that you've got to raise cash right now. And what are you going to raise cash with? A lot of times people are going to sit there and go, I've got these Bitcoin and Ethereum holdings. They're not really doing much of anything. Let me just liquidate them. I can always get back in. And so this is why we get this sort of contagion in other markets where something drops strongly from the S&Ps and it hits other markets like a day or two later. And I think this is one of the reasons why we're seeing some distribution in Bitcoin at this point. All right. So that was one of the things that I wanted to look at. The other thing I want to show you guys really quick here is when we have movements like this. So here is a chart of the S&P futures, and let's go maybe a 12-minute chart. All right, this was this morning. This was during the European Open, and we set this low print on the S&Ps at the European Open. Very likely, when things like this happen, they tend to get retested. So whether or not that occurs in the cash session or that occurs after hours, there's a very good chance that this bear flag is going to break lower at some point here and at least undercut this level. I've seen it with every panic low that we have. We always end up retesting the extreme level, if not a little bit further, because that's how markets capitulate, is they get to the point where people just toss their cookies at this point and say, that's it. I can't handle it anymore. Or they get margin called and wreck themselves. And this is why we get markets explode off the bottom like this. Now, if we look at this, and again, I'm still on the S&P and I'll move over to Bitcoin in just a minute here. If we pull this down to a daily chart, what I'm expecting is I do not expect this to do something like this. I do not expect to see a slingshot movement. This has been so destructive that we will get a complex movement out of this. And for those of you that are into Elliott Wave, this is the old ABC movement. A lot of times we'll see even an undercut of that, a retest of that low. Sometimes we'll see something that occurs that bounces up strongly at some point and forms what I call a scary higher low, and then it takes off. But more than likely, we're going to have some type of transition into sideways and volatile price movement. This is almost like coming upon a really still pond out in the park somewhere, and there's the water's like a piece of, it's like glass, and you pick up a pebble and you throw it in there. You're going to get ripples going back and forth for several minutes, if not a whole hour. And this is typically what happens is when energy hits the tape like this, we're going to get all kinds of movement from this for quite some time. And it's going to affect all markets everywhere. Now, one more thing before I move off of the S&P, I'm going to go way back in time here. And I need to unfortunately move to the SPX because we don't have futures going back that far. All right, so I'm going to go back to 2014 and I want to show you what happened on the Ebola crisis. So we went through this. Here is the Ebola crisis happening, and it just kept tumbling and tumbling and tumbling down. And this one did actually V bottom. So that was a 10% correction that actually did V bottom and then moved to a very sideways and volatile type market character. So that was really interesting. So I'll keep my eyes out for something like that where we did not get a complex correction. Okay, so we've talked about the S&P. Let's go over to our friend Bitcoin. So I'm going to show a slightly different view on this one. And what I've got here on the right-hand side is volume profile. What we understand from this is that if we got to the weekly chart, this was a weekly downtrend. And for us to break that trend to the downside, you can see this lower highs and lower lows. Okay. Lower highs, lower lows, lower highs, lower lows. Okay. Nice swing up. But to break this, we need a combination of a higher high and a higher low. So we've been waiting on the higher low to set up. Now's the time. So if this is going to form as a higher low, we're going to find out really soon whether or not this is going to set up as a higher low and take out the former high and complete that change in polarity back to the upside. So this is a very necessary move that we're seeing in BTC right now versus the US dollar. Okay, back to the volume profile. So what's important about the volume profile? Let me squeeze a bunch of more candles in here. Is that what you need to look for is the high volume nodes. And right now, the most important high volume node is right around 8,000. So former support becomes new resistance. Former resistance becomes new support. So I'm not saying that the price has to go all the way down to 8,000, but that's the battle lines right there. So right in this area, and it doesn't have to go down to it to the tick. It can go down to somewhere between 8,000, 8,200. It can even stop and reverse right where it is right now. This is enough to create a weekly higher low. But we'll find out based on what happens with the volume. The volume has got to indicate when the bears are wrong and they're getting bent back over on their heels, and the bulls have taken the advantage to this. So watch very carefully what happens in here. Also note that the price did not react at all in here. This is almost like an air pocket where you have no volume. There's really no trading around this price here. The price tends to just slice right through there, but it has a very difficult time getting through these high volume nodes. Okay, so that's the last line of defense. Watch that. Now, one more thing before I throw it back here is one thing you can do is you can go out here if you want to, and you can play this through the options market. So you can go out to something like a 27 March, which is about a month away on BTC. And if you want to, you can get paid for that pullback. You can give yourself a little bit of safety. Now, there's not a tremendous amount of implied volatility right now. And some of the folks that are in our Omnia room have been talking about this. This is not exactly a volatility spike right now. Completely different from what we saw at the beginning of the year. This is a very complacent market right now. So there's a lot of assumptions that this is going to bounce. And this is what we're seeing in the option chain, at least on Deribit here. So if we go out here to say 7,500, and it looks like we didn't have any excitement into the close of the equities market, you can sell this for about like 110 bucks. If we take the midpoint, you can get paid to be obligated to buy Bitcoin. Now, I realize these are European settled options, but take it in the spirit of that you'd be willing to pick up BTC at 7,500. Or you could always roll it down if you wanted to, if the price came down to that level. And if you didn't want to just take the cash disbursement on that or the cash loss, you can roll those down if you want to. But again, you can be paid for that pullback if you want to. And it's one way to accumulate if you can find a physically settled version of this, such as Ledger X is physically settled. So I hope they're around in a month or two. All right, so that's kind of what I had to say for this. And so far we'll watch these levels. We'll let you guys know if anything changes to that. All right, Mav, back to you. There we go.
Very nice. Yeah, so we're basically saying the same things in terms of, we're watching this. It's there's obviously things to be concerned about, but also just to be overblown fearful is not the move right now. We should be looking at it more holistically. And cytosine storm. That was the term I was looking for. That's when your a virus gets your body to attack itself. That's what Corona and Ebola do. So yeah, guys, it's the reason. And someone asked why we're spending so much time talking about coronavirus and what's going on and sort of cause and effect. It's because it's worth talking about right now. It's what we're seeing people make lots of assumptions or blow out of proportions with regard to how it's going to affect the market. Is this going to cause a recession? All these sorts of things. It's prescient as to the markets of today, but will it be affecting the market 6 months from now? Probably not. There's definitely going to be some lasting effect to this, but does this become a worldwide epidemic? I don't think so. At least not from what I've seen so far. But yeah, it will have. There is going to be some hotspots. There's going to be some definitely some macro fear for a little bit here. So that's you got to pay attention to that. You got to address it and play the contrarian if you can. That's what we try to do here.
Something else I didn't bring up, I forgot to mention, is the 10-year note is
Oh yeah, yeah.
now down to 1.3%. So we have interest rates dropping, 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 keeping going. They keep going through bear flags after bear flags,
Mhm.
and it has been on a downward spiral since the end of 2018. And we're almost down to historical lows. Now, I don't think the US is going to go into negative rates. All hell would break loose if that happened. So I think, but we're already starting to see a 70% probability that the US Fed will cut rates one more time in
Wow,
June. They're
wow.
probably not going to do it next month, but they could. There's like a 25% chance that they'll do it in March. But this is a world that nobody really understands. I mean, the only potential existing country that's gone through this before is Japan.
Mm.
Just tried to print their way out of a recession, and that they've basically gotten what a lost, almost a lost century coming up now. So, um,
I'm gonna find it interesting to see if they still host the Olympics this summer. Those, we'll see, we'll see.
everybody's like, there's a lot of people in the chat room like, oh, why aren't we going into recession? How can we have this stupid debt printing and all this other stuff?
Mhm.
Look, guys, this can continue on for longer than it's already been going on for 10 years now, and there's no sign of it stopping.
Yeah.
So it's almost like that. You guys remember that musical chairs, that game, and you guys who play with kids, it's almost like musical chairs on an endless loop
Mm.
that the music just never stops because you can just continue printing and printing until you get into, you know, it's funny because all these Fed officials are like, whoa, we can't seem to cause any inflation. And it's like, no, you idiots, you're looking in the wrong spot. They've caused massive amounts of asset inflation.
Mm.
And, BTC is going to be one more asset that's going to be a beneficiary of asset inflation before this is all over. So get some now.
Yeah, it's been going on since we've seen severings of the gold link. We've seen it, unfortunately, one of the I think competitors to the crypto space, and really just having uh, realistic asset ties to things. There's only 21 million Bitcoin, things like that. Is that as technology improves, it also enables more and more of this sort of arbitration, the sort of rehypothecation that we sort of fear or discourage and look at with some degree of animosity to say like debt is the new money in this day and age, and for it to continue to just for us to continue turtles all the way down, like where does this ever stop? It does become a real issue of yeah, it's where does this go? That's it's for one, at least trying to be a speculative investor in this day and age, we have to be cognizant of the fact that if this trend continues, which by all means it will, as more and more debt is just the norm, it's going to push people into more and more speculative assets. Risk is going to become more palatable. People are going to be pushed more towards risk. Um, Certainly, I don't know if you guys watched our video last week where I talked about this a little bit. We're going to see the next time that crypto really has a resurgence, which you know th- even through days like today, we have to keep that perspective in mind. The next time we see crypto, especially altcoins, start to perform, there's going to be the existence of, instead of like a highly speculative ICO market, it's going to be more around highly speculative trading. You're just kind of skipping the whole. You're going past white papers and dreams and going straight to the multipliers and the how much leverage can I get? And because there's going to be so much more access to it, there's going to be so much more ability for people to go 100 times, 200 times on a basket of shit coins, and that's gonna be that's kind of what we're seeing today with the larger markets. It is trading like a shitcoin market in a lot of ways. The PE ratios have no bearing on things. Someone is asking about what we're going to see with Q1 earnings. Yeah, probably there's going to be some pullback, but I think it's also going to be shrugged off in the larger scheme of things. There's still is just too many people expecting the markets to go down. There's just too much. Uh, I the train just isn't ready to go off the rails just yet, which is crazy in a lot of ways. But here we are. So yes, it's the paradigms. It's very interesting.
Yeah, one thing that I've learned over the years, I mean, there's been an awful lot of very, very smart people that are using yesterday's paradigm to trade today's market. And they've been run over again and again and again. It's funny because I saw a video it was from 20 years ago where markets were going ballistic to the upside and nobody had ever seen anything like that before. And so it was interviewing new trader versus old trader, and old trader saying, this can't happen. And new traders saying, I don't care if it's happening or not. I'm just going with it. And those lessons are always important for regarding, whatever market that you're into. I mean, there's always different ways to catch edge, but trying to predict the direction based on your linear logic and what you think should happen based on yesterday's paradigm typically will mean that you're going to get run over. And it's only going to be until the paradigm shifts where you totally understand what's going on. I mean, nobody understood what happened, what was happening back in 2010 when Ben Bernanke stepped up to the microphone in Jackson Hole in their annual conference of, people that meet with stuff like that, economists or something. And he goes, yeah, quantitative easing, we're going to do it. And everybody's like, what did he just say? Quantitative easing? No, he didn't just say that, did he? Well, what he did was he gave a term behind this sort of backroom money printing press that we'd known was going on for years. And still nobody understood what the hell was going to happen with that. And if you look back in a chart back to August of 2010, you're like, wow, that's when things really turned. It was right around then. The smart money figured it out, said, oh my God, they're going to print trillions of dollars and inject it into the markets. There's no way that this is ever going to go down as long as this is happening. And until they get actual inflation in terms of cost of living, although I would say personally that cost of living is a lot more, but however they measure it. But asset inflation has, you know, I mean, guys, we've looked at Amazon going from $200 a share to, over 2,000, 2,200 now. Asset inflation is everywhere.
Yeah, it's we live in a world now of negative interest rates and QE forever. It's yeah, and if you're disgusted by this, or if this is the paradigm that you understand, I'm sure in 20 years you're going to be disgusted by how things have shifted. This is
Markets don't care if you're disgusted or not.
yeah.
Markets just don't care about your opinion. If you come into the markets with with a sense of morality and say, wow, this is the way I'm going to invest because this is what makes sense, I almost guarantee you're going to get run over. This is what's going to happen because I was one of those people. I was one of those people that allowed myself to catch a cognitive bias, and it nearly cost me everything because I let it run me over. And that's the story, I think, behind there's not one trader that's out there that doesn't have one of those stories of like, wow, this is the biggest mistake I ever made. I took, and most of them run around catching a bias based on linear logic that does not account for today's paradigm. So keep aware of that. There's also there's actually a strategy that's out there that anytime that you think that it's a good time to buy, you're supposed to sell. It's like opposite day. Or anytime that you think it's extremely bearish, it's time to sell, you're supposed to buy. And actually, they've proved that strategy makes money.
Yeah. Oh, nice segue into the trend trading course. Ooh, there we go. How does that also tie into fractal trading? Is that a good?
Fract- fractal trading is about fractal trading is about understanding that everything that you see in life in front of you, like just Newtonian physics, also applies towards the markets.
Hmm.
You know, big things carry along smaller things, and people get lost into the minutia of what's happening on a day-to-day basis. They don't step back and look at the larger things. So that's why I have it boiled down to 4 rules. Rule number 1 is that larger time frames dominate the trend. People forget about that. They forget to zoom out, see what's happening at the larger time frame charts, and understand that that will always win. However, if you want to see what happens to reversals, that's rule number 2, which is that reversals happen from the inside out, just like a virus hits you, hits a host cell, replicates, finds more host cells. They all replicate in a fractal manner. And next thing you know, you're sick. But it takes a while for that to reverse. It takes a while for your health to reverse and propagate to the point where your immune system is overwhelmed. So that's rule number 2. Reversals start from the inside out. They start from very small time frames. So if you want to get a heads up on if something may be reversing, that's your look. Rule number 3 is fairly simple. Rising patterns will eventually break to the downside. Falling patterns will eventually break to the upside. Very simple stuff. And then rule number 4 is that range expansion moves to range contraction. If you're going to hope to summit Mount Everest, you're just not going to sprint up there. You're going to say, oh, well, it's only 5 miles. I can go up there in a day. I can do 5 miles in a day. No, you can't. For a lot of different reasons. You go as far as you can until your circulatory system just completely is overwhelmed by the lack of oxygen. You're going to have to stay there for a while and acclimate yourself. Range expansion moves to range contraction until you acclimate yourself to that price, and then you're ready to move on again. So there's a lot of things that you already know about how things work. And what I've done is sort of adapt them towards the world of trading in a manner that I think people can understand. And I've been teaching this now for over 10 years, and finally the book is here. So for those of you who didn't see this before, here's the book. Go to readysetcrypto.com/book. You can get to the Amazon link. So it's out in Kindle and paperback. The paperback is always something I would recommend just because you can write on it. It's a big book too. It's a 10-inch by 7-inch format. And hey, talk about truth in advertising. Hey, look at that. Compare. It's the same thing, right? So a lot of people put some younger picture of themselves up there. I have not done that, right? So truth in advertising, it's all out there.
What
Hope you guys
font?
like it.
What font do you have it in?
It's like Palatino. I forget.
No,
It's
the font size. What font size?
oh, it's Crayola size.
All
It's
right,
like
good. You got some boomer font. Yeah.
it's big enough that I could probably read it from 3 feet away.
Cool. uh,
All right, so I just went off on stuff though.
hmm,
Um, it's the same old thing, guys. It's the same old thing that we are reminded all the time is markets are always pricing in it. It's just a massive discounting operation. It's looking forward 6 to 9 months. It does not care about today's news unless today's news is absolutely unknown. That's what's called exogenous events affecting today's price. So that's what happened when we got the point the other day, like, oops, okay, it's not contained. Oops, it's killed a lot of people. Oops, those are things where uncertainty will wreck markets until they forward price in to say, oh, it's contained. Let's buy.
it's known as a dead bat bounce. Because they ate the bats. And, all right.
An expired feline recoil. That's politically correct.
Oh my. Yeah, it's
Oh, I don't want to anger too many people here.
all right. Yeah, well, we toe the line here. Yeah.
No, we don't.
Ah.
Did Harvey Wankstein affect the price?
Well, he
No.
certainly used his walker. I don't know. I don't have a
No,
good.
I felt yeah, the fact that he was on a walker really made me feel bad for him.
Me too. Yeah, especially at the tennis balls. He's really trying to sell it. uh,
Didn't work.
nope.
Didn't work. Harvey did not kill himself.
Oof. Oh
Just
my.
going to say it out there right now.
Yeah.
Okay. Anybody have any questions for us while we're talking about Harvey Weinstein and Miles? Thanks for joining our event here.
Yeah.
I don't want to call it a show. It's not really a show. It's just a couple of dudes talking, and we'll take questions.
Throwing in occasional puns and you know.
Oh, Lou Reed is here, man. I love that guy's albums.
Going right over my head.
Oh, that's a boomer joke. Sorry.
Yeah. Yeah. So hopefully you guys understand that we're looking at this like, for one, that things are a little bit overblown, and yes, we like to play contrarian, and yes, sometimes someone was talking about immoral markets. Sometimes you have to be like, oh no, the price didn't go up because more people are getting this potentially lethal disease. Oh man, oh the price went up because we were potentially at war with Iran. Yeah, neo-capitalism is kind of a trip. And, it's you do what you have to do in terms of you're essentially just betting against the market. We are sort of approaching this new form of globalized gambling that is the markets that we're in. But that's at the same time, this is the way to make money in an increasingly digital age. So our job here is to reduce the amount of risk that we're dealing with, also reduce the amount of fear, and just take the emotions out of it as much as possible. Oh man. We're getting some spicy chat today. This is great. So yeah, it's good times. The question about options is actually pretty good.
Options allow you to do so many different things. Options allow you. I wish there were better solutions that are out there today. Deribet has done everything that they can to exclude the U.S. markets because they're scared of the SEC. So sorry,
Yeah.
it just pisses me off that these people have to do this. And it's funny because the U.S. has the strongest and most liquid markets in the world, with the exception of crypto, because crypto represents a threat to the dollar being, the reserve currency of the world.
The Big Mac.
I get it that it's a political thing, but it's so a lot of businesses out there are just scared shitless of going against the SEC for a good reason. I mean, even Arthur is like, Arthur Hayes is a little concerned about it. So
Yeah.
so options are amazing. I mean, it's right now we're seeing the compression of all these instruments in the equities markets, and this has been going on for the last 20 years because equities are untradeable. You can't find anybody now that can afford anything. Like, what are you going to do? Buy one share of Amazon for $2,000? I mean, this is just ridiculous. So what you do is you play the derivatives, you play the options market, and the U.S. has great options markets. Unfortunately, they don't really let the brokers don't really let people from other countries trade them all that well. So sometimes we can get folks from Australia on board. Sometimes Canadians are getting on board. But apart from that, it's really hit and miss. It's really difficult. So then they have to play their own options, their own native options markets, say, the Australian or the British markets, but they're nowhere near as liquid. So crypto has been coming out for the last couple of years with not only futures are pervasive now, which is great, but also the options market. But it's just so immature right now. So it's getting there. I mean, Deribit, I think, is really good if they, you know, if you can get in there, if you can actually get past the KYC firewalls, then it's a great solution because it allows you to create income. It allows you to design trades that you can't do any other way. It allows you to be wrong in the direction of a trade and still win. It allows you to do so many different things with it. And we're just now starting to get into the liquidity, which is necessary for that.
Yeah, so there was let me find this here. Awesome. So there was a question, or I think it was, oh, oh man, guys, I keep messing this up. I'm so sorry. Uh, Whatever. I'm just gonna roll with it. Windows likes to jump things around on me. Uh, there's a question about, or a point raised about the ETF um, denial today and how that's also going to affect the markets. Let me resize this here. And honestly, this is should not be a surprise. This was the last outstanding Bitcoin ETF application under review by the SEC. Now we're talking about it. Um, but I made this Airtable for Omnia members a couple weeks ago just to list all the current and previous ETF applications. Well, no longer any current, but so yeah, the whole takeaway was that the one that was outstanding, it sucked. It had less than a 5% chance of being approved. But over the next couple of years, we will see more market maturation and just market infrastructure that would better enable us to see an ETF potentially. But it's just not the same thing that we were hoping for in 2018 in terms of bringing maturity to the market. And that's the second point I kind of want to make is that when we look at this space, someone was asking how long things are going to be bearish. Understand what this space is. Understand where it is in 2020 and what it needs to see any sort of real sustained resurgence. Um, Look at the larger markets and understand the role that they play. Why would anyone, even if Bitcoin is returning marginally better than the larger assets, the larger markets, larger indices, whatever. Even if it's returning a couple, 50% better returns or whatever, the volatility and the risk that comes with that, as sort of a price tag for that gain, is not worth it, especially to the larger traders, especially the institutions who are managing people's money. Um, that's just the case. Now, when we start to see a reversal, some sort of catalyst that does, more than what coronavirus is going to be able to do, that does push the worldwide economy into more of a state of uncertainty. When people are truly looking for safe havens, they're not looking for safe havens in these micro little movements like this. Yeah, some people are, but for the most part, to be converting between asset classes, other than maybe going to gold, it just is not going to be the case. But when we start to see real uncertainty, real market panic hit, when there's really a concern about the longevity, the permanence, the opportunity inherent in the larger markets, that's when we're going to see capital not just flee to crypto, but there's going to be people going for real estate, people looking for gold, things like that. So that's crypto's opportunity. And so our job is just to exist as an alternative asset class. Um, but to just hope that things are going to turn around because the halving happens, or Ethereum 2.0 or something like that. That's never going to be the case. We will never see resurgence just based on the own merits of our space. We are, unfortunately or fortunately, bound to the externalities of the larger markets. What's going on in the larger markets. That's what's really changed in the last couple of years. So I hope you guys understand that. Like when we see the markets shift, it's not going to be all at first. People aren't going to just like all. When we see one big red candle, people aren't just going to run into Bitcoin. It doesn't work like that. But when there's true systemic panic and risk and things of that sort, that's our time to shine. But that's also an unproven thesis, so we'll see. Uh, it's just there's gonna be things are gonna be changing over the next couple of years. It's gonna be interesting, but also who knows? But our job is just to try to navigate that as best as possible. So glad you're here. So
I think it is time for us to wrap things up today. The
yeah,
chat room's turning into a time bomb that's just about to explode.
excellent. Good to see that.
So our work here is done.
Yes.
We've done our job to
we
rile everybody up.
well, yeah. But hope you guys are doing well and taking today in stride. As I feel, buy red, get bread. But you got to do what you can. But as always, we appreciate you guys hanging out with us and having a good time. And yeah, we'll be back here next week. But yeah, just keep it easy, guys, and yeah, keep it loose, keep it going. I don't know. But yeah, appreciate you guys. See ya. Cheers.
Thanks, everybody.
Bye, guys.